It's about that time of day again. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. Wednesday evening, July 6, 2016. Markets continue to move well through the first week of the month. Plenty of reliable trading opportunities today, and many more setting up for tomorrow's session. Crude oil, S&P, and euro are all bullish, while gold appears to be failing and looking to retest lows on Thursday morning. Got a great video for you guys tonight. Got plenty of opportunities going into tomorrow's session. We'll check the calendar. We'll check the charts. But you know how we always start out, right? Only place to watch the full-length version of this video is on our blog here at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, there's a link in the description of the YouTube video. Follow that link. Come join me over here on the blog for the full-length version in all four markets of analysis. While you're here, don't forget, grab your free pass in the upper left-hand corner. If you're not a member here at School of Trade and you'd like a free pass, come out and test drive the trade room. Grab that free pass in the upper left-hand corner. Below the video, lower left-hand corner, make sure you register for our mailing list. You need your name, your email address, and then make sure you check your inbox. I'm going to send you a verification email to make sure we have the correct email address. And then every evening, right about time for the newsletter to be watched, you'll get an email from me when you're ready to watch the nightly newsletter. Also, right below the video tonight, you can download all the charts you see me using in tonight's video. Grab those charts below the video tonight on the blog. And don't forget, we get the best free trial in the business. You're going to learn more with me in 1 week on my trial than you will anywhere else on the interwebs. I can guarantee you that. And I am always here to answer your questions 24/7, 365. Use the live support button on the right side of the blog. You guys ready to rock and roll? Seatbelts fastened? Helmets on? I hope so. I hope so. Markets are definitely winding up here ahead of the non-farm Friday, which of course is going to be only about 36 hours away. Friday is going to be non-farm Friday. Before we get there, though, let's double check the schedule for tonight into tomorrow. We're coming out of the FOMC meeting minutes here this evening. That means in Asia, they are waking up, right, to being able to read and, of course, interpret those FOMC meeting minutes. That will be a big factor going into the early part of the Asian and into London session tomorrow. As we go into tomorrow, no major news out of Asia, no major news from our friends in Australia. We definitely have, of course, a plethora of news waiting for us, though, on Thursday morning. If you're trading the London session, you get the CPI from our good friends in Switzerland. You get the Great Britain Halifax Home Price Index, and, of course, the very highly anticipated ECB minutes at 7:30 a.m. tomorrow morning. The big headline news report tomorrow morning in the London session will be the ECB meeting minutes. I wonder what they're going to be talking about post-Brexit, right? That will definitely be an important meeting minutes announcement tomorrow, so be ready for that. If you're with me tomorrow morning in the trade room, we open up at 8 o'clock Eastern time. As you can see here, we've got news from the ADP employment report tomorrow morning, 8:15. Jobs claims at 8:30. We then jump down to the PMI from Canada. Don't forget, Canadian news oftentimes will move the needle for crude oil futures. And then don't forget, we had a holiday on Monday. That means Wednesday's inventory report has been pushed back to tomorrow at 11:30 a.m. Eastern time. Don't forget, Monday was a holiday, which means Wednesday's news for crude was pushed back till tomorrow morning at 11 a.m. So with me tomorrow morning, again, we have the 7:30 a.m. ECB minutes. Those will be big news for London session traders as we start to open up in the U.S. session. We'll then go into the ADP employment report, jobless claims at 8:30. PMI from our good friends north of the border. Don't forget that oftentimes will move the needle for crude oil. And, of course, the petroleum status report at 11 a.m. Eastern time tomorrow. That will do it for the news tomorrow. And, of course, in tomorrow night's newsletter, we'll put together a plan for non-farm Friday, right? I won't bore you with the drum roll, right? But that is a very important news event that will be coming right around the corner. Heads up, tomorrow afternoon will typically be one of the slower afternoon sessions just because you've got the employment number coming out at 8:30 a.m. on Friday morning. Highly anticipated ECB meeting minutes, inventory report. Go easy tomorrow afternoon because we have the non-farm Friday report coming right around the corner. We'll talk more about that in tomorrow night's newsletter. Let's jump right into it here. We got crude, S&P, gold, and of course we can't forget about the euro. Crude is bullish and trading with a spike in channel this evening. The session started with the bears in control this morning, but shortly after 11 a.m. Eastern Time, the bulls took clear control with a spike higher that sent price all the way up to the double-up target at 47.58 and began trading with a spike in channel. We can see the bulls took profit at the first test of the target, right, that double-up target, and then got a beautiful trap low just below that prior swing to finish the move back to the highs of the channel. Buyers will certainly be interested, but this last push higher is based on the 4:30 p.m. API report, which of course precedes the tomorrow morning inventory report from the DOE. Basically, this move, this last spike higher, very strong, but it's coming off of news, which means it's not reliable to buy this high, and much more reliable to wait for the rotation back to the lows of the channel, or even better, a pullback to the correction zone just below $47 a barrel. Sellers need to be patient right now because the strength of this move will likely make it difficult to find reliable selling opportunities, as buyers will be scaling into this move as it pulls back to support levels below. Now, really, when we see big spikes like this, there's ultimately one of two things likely to happen. One, we continue, hold the high of that channel, and when we see it hold the high of that channel, it usually continues, very much like we're seeing right here on this bull channel. Right, price jumps up, big spike up, holds the high of that channel, right, and then of course proceeds to continue. So keep in mind, not the most desirable result, but that will be what we'll get. We only have what the market gives us. Spike higher, if they can hold above the high of that channel, that tells you now be looking for those pullbacks to go higher here, and we'll have to wait and see where that pullback takes us, and that will give us a measured move target overhead. All right, use that spike up as a measuring spike, and then pull back top of the channel, and then up for that next leg higher. Okay, we'll have to wait and see what happens here as we go into the Asia and early morning London session to see where that puts us. The most reliable trade here is definitely going to be a move back down to the low of that spike in channel. We talked about spike in channels in last night's newsletter. So if you missed last night's newsletter, don't forget, you can scroll right down the website and you'll see last night's newsletter there. You can also, of course, go to our YouTube channel and you'll see the previous newsletter video there in sequence. If you watched last night's newsletter, you know the rule of thumb, right? 1, 2, 3, right? That's the met number of 3. You might not get that third one because of 1, 2, let's say 3. Okay, so we'll call that one 1, 2, and then 3. Then obviously here, the correction zone at the base of that channel. Most reliable buying opportunities right now for the bulls. Again, break out, pull back, hold above the high of that channel. That's definitely the most aggressive. And just like you saw back here where we trapped low, don't be surprised if we get another example of that. Pull back, trap low, and go up from there. Other than that, pull back. Sellers, of course, will think this is a bear market. Seller failure to buy it back up. Pull back. Sellers, of course, will think this is a bearish market. Seller failure and buy it back up from there. That leads me to where the most reliable opportunities will be for the sellers. This is a really tough market to be able to sell right now. Really, the only way you're going to have confidence here to be a seller is if we can get below that bull major channel high, and of course below the bull spike in channel high, and then look for that area to hold now as resistance for a sell back down. You're going to have to get to it quickly here. We get an example of this on the euro as well. If you want to be a bear, I definitely do not trust selling this high right now, right? Would you want to sell into a spike like that? Even though it is anticipated to pull back, it's just not a reliable trade to sell into strength like that. So again, buyers looking for the pullback to hold, to continue going higher, looking to buy the low of that spike in channel on a seller failure, buy the low in that correction zone. Remember, as this market pulls back even further, there will be a bearish move to it. And so what you want to look for is for sellers to try to sell that next retracement. When they fail, that'll be your cue there to be a buyer buying into their stop losses. And then, of course, that strength leads to pullbacks, and pullbacks, of course, back to the high. As we pull back, the target is back to the high of day. As we pull back, the target is back to the high of day. And again, if you're a bear right now, look for that move And again, it's going to be tight. It's going to be tight. You got to find a way into it. And remember, this is definitely difficult because everywhere, all of these prior swings here, you can assume now buyers are going to be interested in buying this market up. All right, so make sure you look for that open space here, and that's where the bears, right, can try to get in on the, I guess, not a reversal, but on a breakdown pullback, holding below the high of that bull channel. Keep in mind, we'll be open the trade room tomorrow morning at 8 o'clock Eastern time, and we'll do it all together with all of our students here at SOT. Let's keep going. S&P is bullish and trading inside of a wedge this evening. The day started with a trading range this morning, but shortly after 11 a.m. Eastern time, the bulls took control with a spike in channel that appears to be narrowing into a bullish wedge. The wedge tells the buyers to look for traps below the prior swings and provides a target up around 20.95, while the spike in channel provides additional opportunities at the lows of the channel as well as the correction zone back at 20.83. Sellers, once again, need to be patient right now because the more this market pulls back, the more buyers will be interested. But once we get and hold a pullback below the high of the trading range, we should see a reliable move back to the lows of the range that started today's session. A couple big clues in this chart here. We have that bull spike in channel. That bull spike in channel tells us to be looking for those buying opportunities back to the lows, back to the correction zone, and then, of course, a potential larger bull channel giving us a chance here at that trend line support. We can also see a bull wedge, right? This bull wedge that's forming here. Higher highs, higher lows, and it's getting narrower. When we see a wedge on the chart, we know a couple things. First of all, we know there's a big target right at the vertex of those two trend lines. That's the target. We also know that there are swing levels down here, and we want to look for buying opportunities at prior areas of support on the way back up to that target. Once we get to that target, of course, is resistance. Buyers will take profit. Sellers will try to sell it. We'll look for a two-legged correction and then back up to revisit it once again, much like a measured move or any other market objectives. So we find ourselves trading inside of a wedge. Look for those trap lows up to the target. Again, we don't know where that trap low will happen. It may happen a little bit lower. Once we pull back, though, we're looking for sellers to try to sell it on the move lower. If they fail, we then look for that seller failure into strength into pullbacks, and of course pullbacks up to that target overhead. Once we get to that target, then we look for profit taking from the buyers, right? It's a market objective, which means we then look for a two-legged correction, and then of course seller failure, and then back up to retest that target overhead. That will be the mission, at least in the medium term, for the buyers right now. If we go higher from there, then we look for more information from there. If we reverse from there, then we look for the sellers to take control from there. As you can see, two very important clues right now, right? Two very important clues. We have the bull spike in channel. That bull spike in channel gives us buying opportunities at the low of that channel, inside the correction zone. And then that, of course, hidden channel low being another opportunity there for a buying opportunity. The bull wedge gives us the pullback areas here. Trap low up to the wedge target. Trap low up to that wedge target. Nice and easy there, right? Nice and easy. And then, of course, we can get to that wedge target. We look for that two-legged correction and then back up to it again. From there, we'll see if they want to get to that 2100 and if they want to really run this sucker up to that measured move overhead. All right, what else we got here? Bears, keep an eye on this trading range. This trading range will be a price magnet if for some reason these buyers can't get their act together and send this price higher. Now, like I said on crude oil, with such a strong market like this, I mean, look at this. Ever since about 11 a.m., it only pulled back to hit the moving average once, right? That's a pretty darn strong market. We know bulls, right? We know the bears. You got to be careful right now because as this market pulls back, bulls will be entering in, scaling into their positions. But if we can get and stay below the high of that range, and I know this sounds crazy, but this is pretty much the only reliable selling opportunity you're going to have because as this market pulls back, even the high